Hello again, this is Terry Price, and welcome to the next chapter in our series entitled Tax Cuts and Jobs Act of 2017, How This Affects You. I hope you enjoy. Welcome to the sixth chapter in our series covering the changes enacted by the Tax Cuts and Jobs Act of 2017. This chapter will cover miscellaneous deductions. Last year, if you itemized your deductions on Schedule A, you may have had some items that you claimed in the section entitled Job Expenses and Certain Miscellaneous Deductions. Some of the items you claimed here could have been unreimbursed employees' expenses. If you had legitimate business expenses related to your job, such as travel, transportation, meals and entertainment, office supplies, or an office and home, that were not reimbursed by your employer, you would have claimed them on Form 2106 and entered the results here. Also, other expenses such as union dues, uniforms, work clothing, tax preparation fees, investment expenses, or safe deposit box fees were allowed here. For 2018, all these expenses are gone. You can no longer deduct these items on your personal tax return. To see how this affects you, look at line 27 on your 2017 Schedule A, and you will see the amount of lost deductions for 2018. There are some other deductions that have been around for a while that is no longer available. First, the personal casualty and theft loss. In the past, we were able to deduct the amount our property was devalued due to an event such as a storm or a car wreck, or the value of property that was stolen minus any reimbursements we received. This deduction is no longer available. There is an exception. If you live in an area that was a federally declared disaster area and you have a loss due to the disaster event, you can still claim your disaster loss. You would claim this by completing Form 4684 and placing the results on line 15 of your Schedule A. Now note, the event and the loss would need to be incurred during 2018 to claim it on the 2018 tax return. The second item is moving expenses. In the past, if you moved for a job that is more than 50 miles away from your former home, you could deduct the expenses from the move. This is no longer available. If your new employer reimburses or pays for the move, then it must now be included in your income. And with the new law, you cannot claim any expenses against it. The only exception is for active members of the armed forces that must move because of orders. If this is your situation, then you will claim the expenses on Form 3903 and place the results on line 26 of the new Schedule 1. I apologize, this was the "you can't anymore" video. Sometimes that's just the way it goes. Thank you for watching this chapter covering miscellaneous deductions, or the lack thereof. We appreciate your time. Join us next time as we will have some good news when we cover the child and other dependent tax credit. See you next time. Thank you. For more of this video series covering the Tax Cuts and Jobs Act of 2017, be sure to follow us on Facebook. You can find us using @TerryLPrice CPA. For previous chapters of the series, go to www.terrylprice.com/CPA and click on videos. There you will find all the previous videos. If you have questions, please email us at cpa@terrylprice.com. Please do not post tax questions as a Facebook comment. This video series is to provide some basic information concerning the recent changes in the tax laws. This is not to be considered tax advice. please consult your tax preparer to analyze your individual tax situation. Thanks for watching.